Hi everyone, Tim Wood, broker owner with theplanadvisor.com. Just want to talk real quick about different types of life insurance. I get this question a lot. What's the difference between term and whole life, and which should I do? Well, the very simple answer is, in a vast majority of cases, term life is the simplest, the easiest, by far the most cost effective. Whole life can be great, but it depends on the specific circumstance and situation that you're in. If you happen to be 25 years old and have a high disposable income, and we can put some of that into a whole life policy and then be able to show you, well, at 45, look at how much cash value this has accumulated. That's great. But for most people that are in their 40s, 50s, 60s, maybe even 70s, looking to either add on or get some life insurance, a term policy typically is the way that I suggest to go and the way that most clients go. One of the things that I suggest you look for is, like us, the plan advisor, look for a place you can go that's independent. One of the things that we're able to do is we're able to shop literally all of the companies out there and find you the best deal for your specific situation, your age, your health, all the things you can consider. Once you put all that together, we're able to look at all the different options. So that would be my biggest consideration, is make sure you're with somewhere that can really look at all your options, figure out exactly what you're looking to do. Let's say you're 65 years old and you want a 20-year term policy. Okay, great. Well, then basically that's going to pay for 20 years, and that premium is going to stay level for that 20 years, so you don't have to worry about your premium increasing. Now, if you live to age 86, you're not going to have any coverage. That's the negative part to it. So that's really the difference. Term, it terminates. That's why it's called term. It's also done for a term, which could be 10, 15, 20, 25, 30 years. There's different terms. But it also terminates. That's one easy way to think about it. Is it is not a permanent policy. It is a policy kind of like a car policy. If you stop paying on it, it's done. It's over, just like a car policy. And as long as you've got that policy and you pass away, then whoever your beneficiary is gets whatever the amount is on that policy. If you don't and you live through the whole thing and pay the whole thing, once it's done, it's done. So that's the big difference in a whole life policy. A whole life policy can literally be 10 times as expensive, but that money is actually going into an account, and that is money that after time you would be able to start using and drawing on yourself. Now, one thing to keep in mind also with whole life policies is typically the cash value isn't high enough to even talk about until you get into the 15 to 20 year range. So this isn't an investment product, just like none of our products are investment products. So once again, just figure out exactly what you're looking to do. Get in touch with one of our advisors. Go ahead and set an appointment, or just shoot us a chat right here and ask a question. We'll help you. Or right up here at the top of the page right here, there's you can actually go ahead and get a free quote. So do that. Contact us. We'll be happy to help you and make sure that you get the best coverage that you can get for what you need. Thanks. Talk to you soon. Bye.